Hello and welcome to the Gold, Ghosts, and Guns market report for today, September 30th, 2020. My name is Tom Luongo. We have a lot to talk about because it is the end of Q3. Now, I'm going to have a lot of discussion about quarterly closing prices today. I put most of the charts together late last night because I was up after having drank way too much coffee and being way too combative after watching the ridiculousness that was last night's debate. Okay, let's talk about it. I know you guys probably want to know what I'm thinking about this thing, what happened last night. First things first, Trump is hilarious. I want him to survive a second term simply because he makes everything more fun. When it comes to just actually dealing with the media, Trump is hilarious. And the idea that we're going to go back to the kind of silly, staid, boring, technocratic government that we had under Obama, or that's going to be restored under Biden, who clearly is not capable of running this country in any competent manner, and that we're going to have to suffer through 4 years of Kamala Harris's magical vagina. That's just not going to be acceptable. All right, so how did I think Trump did last night? I think he missed a lot of opportunities to come across as presidential. He was hilarious, and he was combative, and it was pretty obvious about a third of the way through the debate that Chris Wallace was actively activated by Fox News to shut him down and allow Biden an uninterrupted opportunity to speak to the American people. And it became clear that to Trump, that was the way the evening was going to go. He couldn't intervene anymore to unpack or debunk any of the lies that Biden was telling, which were bald-faced lies that even the New York Times had to come out and fact-check him on. But it doesn't matter. Biden came across as sincere, if completely clueless as to what's going forward. What's coming at him and what the challenges are in front of him. Trump came across as sincere as well, informed in his own way. He's like, look, Trump is at his best. He's like, dude, I had the guy in my office the other day. What the hell are you talking about? Like, that's not what's happening in this world. Like, that's not what's happening. You don't have any idea what's going on because, Joe, you're in your basement all day. That stuff plays well. It just does. And the Cernovich crowd won't admit otherwise. But Trump did just fine in getting Joe completely freaking rattled and off talking point. He did it early in the debate, and eventually Wallace had to step in and save Joe from really going off the rails. I don't think it helped anybody. I don't think it helped Trump. I think Martin Armstrong's comments this morning that it didn't help Trump to reach out to moderate voters who are undecided. I don't really think there are that very many people in that camp in this country. The GDP numbers came out today, and we're going to discuss that because I had to revise at least one chart coming into this morning over last night's prices. Honestly, I was up to like 4 o'clock last night. So right around the European Open last night, I was putting the charts together, and I'm like, oh, it was really more like 1 o'clock, but whatever. And it was pretty clear that last night we were looking at a bad open. I think the markets were trying to handicap that Trump didn't do very well. And now we're looking at a 400-point rally to close the quarter on the Dow. And to me, that's signaling, that the GDP numbers are fine. Biden can't make the argument that we should lock down the country and we should stay fearful. That his basic idea that what came across to people was, look, it's still unsafe out there and we need to have a plan as to what we're going to do. And Trump doesn't have a plan. Like, Trump has a plan. We've got the military standing by to distribute a vaccine if you want it. I think that deaths are dropping and the thing is mostly over. So what are we worried about? And that's where Trump was at his best. And to be honest with you, I'll be surprised and shocked if the ratings didn't fall off after the first half an hour. Because Trump was Trump. Biden was, well, better than expected because, the drugs were good. and the earpiece in his ear and the wire and the whole 9 yards. I mean, he was obviously wired. He obviously had notes. He obviously had talking points. And he's obviously very skilled. I mean, give Joe Biden all the credit in the world. The guy has been doing this for most of his life. So he's not, he has a wealth of experience to draw upon in that moment, even if he isn't, 20% of the guy he used to be. Because Trump would be in real trouble if Biden was actually in full control of his faculties at this point. And he would have to do a lot better job prepping himself for a hostile environment. Period. So I don't think it moves the needle in any direction. I think Trump doesn't come across as anything other than sincere. If, he's an asshole, we know that. Everybody knows this. Like, the idea that Joe Biden is going to get upset with Donald Trump for being an asshole after Donald Trump's been an asshole his entire life, that is dumb. Like, it's not going to work. And when you really look at the body language and everything else, it's pretty clear Trump is in control of the situation in the White House far more than the media wants you to believe. And he's on top of issues. And they tell you all the time that he doesn't know what he's doing. And yet, he doesn't come across that way at all. He comes across as competent, if thin-skinned. And given everything that's happened in the last 4 years, he has a right to be thin-skinned. He has a right to be combative about it. And if he were to come out and just kind of, roll over and let Joe say his piece and let Chris Wallace shout him down, he would come across as, not somebody willing to fight. I think he'll review this tape and go, I need to tone it down about 20%. And I need to be a little bit more specific. And then, crush him in debates 2 and 3. The key for this is going to be the ratings. Somebody brought up a really important point. I was reading my Twitter feed yesterday to Joe Cotto over at the Cotto Godfrey blog or podcast. And someone said, look, the ratings on the debates are a better primer for how important they are than anything. If the ratings are poor, and I didn't check before we went live this morning, if the ratings were poor, if people weren't tuning in, and that's not a story this morning, a record number of people tuned into the Trump-Biden debate last night, I didn't see that anywhere. So I didn't see it on RT, I didn't see it on, I didn't see it on Bloomberg or anything like that. If the ratings were poor, it means that people have already made their decision and they're comfortable with the incumbent. And the challenger has the case to make. And that's the situation. And I am not, and that scans with everything I've heard so far, which is that most people, even people who are going to vote for Biden, think Trump's going to win. And that this is all, all these silly issues like mail-in ballots and all this other stuff, and the talk of priming the Civil War narrative, which Chris Wallace absolutely did last night. I don't think the American people are interested in it. I think they want to have an election result handed down on election night, sometime between, the closing of the polls in Arizona and 3 a.m. like they were in 2016, and maybe as late as 7 o'clock the next morning when they wake up. Like, that's what they want to know. And they're not going to stand for anything else. Oh my God, there's hanging chads or, mislabeled ballots. We found a truckload of ballots, or, no one's going to want any of that crap. They're tired of this. They're tired of the wow, just wow every freaking day. And if anything is going to create the foundation for an end to this obvious globalist horseshit, it will be that. It will be the complete and utter outrage from people like, why in the hell can we not get this election right? What is wrong with you people? Will you just stop? You lost. No, we really didn't. You lost. Period. I love the fact that Trump came out last night and said, look, elections have consequences. We have the Senate, we have the White House, and we're going to push our Supreme Court justice. We're going to push a justice onto the court. If the shoe was on the other foot, the Democrats would have done the same thing. 2016, they didn't have the Senate. They couldn't push Merrick Garland onto the court. That's the way it is. Everything else is not under discussion. That's the law. It's my duty to fill the court. Biden body swerved every question that mattered. Packing the court, all the rest of it. He was obviously coached on it. So, all right. Enough about the debates, enough about the election. I think that this didn't hurt Trump at all. And I don't think the polls were accurate. And I think he's going to win an electoral college walk. I don't see anything changing. And if I'm wrong about that, it'll be because last night's ratings were bonanza. And I don't think that they were. All right. I want to talk about Brexit a bit because we did have the third reading of the Internal Markets Bill yesterday in Parliament. Theresa May tried to lead a coup against Boris Johnson. Like everything else she's ever done in her life, she's failed miserably. Good to see that Theresa hasn't changed any, hasn't all of a sudden grown a competency spine. But the Internal Markets Bill is going through. The EU has finally caved on blocking food shipments from Britain into Northern Ireland. So maybe there's the potential for a deal. I don't think so. I think that the EU is going to cave on as many things as possible at the last minute, and Boris Johnson's still going to tell them to go scratch. That's what I think is happening. And I would if I were Johnson. I think Johnson realizes now that the withdrawal agreement is terrible and that it's still not good enough under its current conditions. And that's why he put the Internal Markets Bill together. Because he's interested in saving the United Kingdom. And this is the only way for him to do it. And I've made this point before, and I'll continue to make it. It was part of the subject of my podcast I did with Alexander Mercouris when we talked about Brexit in depth. The Internal Markets Bill is not just about ensuring that the EU doesn't cleave off Northern Ireland. It's also to ensure that they don't cleave off Scotland. And the Scots, the Scottish National Party, really does think that they can pull a two-step on the Scottish people and overthrow the Queen and then hand it to the EU SSR's Politburo. The one run by Germans. Yeah, that's not going to happen. And that's the thing that the SNP has to realize. That's what Nicola Sturgeon and Ian Blackford and the rest of them are very worried about. They know they have to push here and now. And the Internal Markets Bill, again, elections have consequences. Boris has got an 80-plus seat majority in the House of Commons. 20 Tories could defy a three-line whip, and he would still win it in a walk, win the vote in a walk, and it won't matter. Yeah, it's a little embarrassing. So what? Given the situation. But with Michael Gove in charge as Chief Cabinet Secretary, said Will gone, the EU is proving to be a toothless actor in these negotiations. And David Frost and Michael Gove are just standing their ground. Go, no, we want a Canada deal. We've been very clear. We want a Canada deal. You can't have one. Okay, well, then we'll have no deal. Well, you can't have no deal. It'll be terrible for you. That's nice. You've been saying that for 4 years. We don't believe you. We'll put tariffs on German cars. The German economy is already in the shitter. With German GDP coming in, or German inflation rate coming in at deflation, the worst deflation in over 5 years on Monday. I got news for you. like the Germans have no leg to stand on. And I'm going to show you the chart of the DAX today, as opposed to the Nasdaq. We're going to look at the Dow and the DAX and the quarter, because it's important that we look at those two very important broad industrial indices. Okay, to see that. Well, you'll see what I'm talking about. So let's get to the charts so I can get you out of here. All right, because that was 14 minutes, and that's right on schedule, as opposed to going off for 25 minutes. All right. So gold this morning is trading right around 1890 or so. There was it was rallying into the open like it has been, and that was crushed on the COMEX open. I delayed starting my recording this morning by about 10 minutes because I sat there and I wanted to watch the gold market for a couple minutes as we came into the European close. I'm recording this right between 10:20 and the European close, right? I should get done right around 11 o'clock. We had a breakdown in gold on the weekly chart last week, and gold is still on a weekly chart in a very bearish position. Now, it's good to see that we're trading back towards 1900 to close the month, and that will improve the quarterly and monthly charts, and will avoid a very ugly reversal bar. Any close today above that 1864.30 level is a good thing for the monthly chart, and as I'm going to show in a minute, the quarterly chart has no technical breakdown, so everything's fine. But that being said, we're still in an ugly period. We're still in an ugly area here, and I'll show you why. Okay, we have a worrying high tail that's coming in here on this gold quarterly chart, and it's very obvious that they're pushing this. Like, this is the whole point of coming into Q3 this way. Gold could have easily ended this quarter at 1950, 1965, 1970, right in the middle of this bar, even in the upper half of this bar, and put in a quarterly close above the all-time high of 1920.80. Now remember, this is cash basis, not any other quoted number you've ever seen. So with that in mind, okay, what's happening here is that we're trying to create a blow off top chart pattern in gold here and hold it in place for another 2 quarters or so, because it leaves gold vulnerable to a 2-bar reversal by the end of Q2, or by the end of Q1, excuse me. So for Q4 and Q1, we traded up here, if we close up here, there's almost no potential for that, because momentum would be, oh, look, we closed the quarter above 1920, forget it, I'm going long gold. And all of a sudden, a whole bunch of people come into the market, and then they can't control it at that point. So it's important that gold was managed below $1,900 for the end of this quarter. That still makes it the highest quarterly close of all time, but it's not closing above the all-time high. And for some technical traders, they will look at that as a warning signal. They will see this high tail, and they will stay off the sidelines. And that's what you have to worry about. But we have no breakdown on the monthly chart, which doesn't give us a signal internally for 2020 that there's going to be weakness coming into the for the fourth quarter. There's no reversal signal. We've neatly avoided it. We're moving on. So gold looks pretty good from there. All right, same thing going on in silver. You have the exact same kind of thing happening here, where they had pushed the price of silver back below $25, $26 in order to create some doubt in the minds of traders. Now, what we did do, what you don't see here in this chart, because you can't see it, if you go into the weekly chart, you'll see that the washout over the last couple of weeks has retested this breakout area here, this former resistance zone at 21.13, $21, yada yada yada, all these highs in here. We've already had the retest of this, and now on the more granular charts and the shorter time period charts, you'll see now there's the opportunity to bounce off that and go higher, and we're getting that into today. Silver looks like it's going to close above 23.44, probably closer to $24, especially if there's any more weakness in the dollar before the end of the day. They've set that trade up. We're about to talk about that when we get to the euro. So silver and gold right now have been managed to create the last vestiges of doubt in their technical strength in the minds of long-term traders. That means fund managers, family office types who are looking at the quarterly closes going, okay, are we ready to go long? Well, we got breakouts. We got all-time quarterly highs in gold. We got a breakout in silver. But I'm not going to put as much money into this. I'm only going to put 4% into gold as opposed to 8% or 10%. And that's what this is about, because that is the money that will take silver to $45, $50, $60 this year as opposed to next year. Okay? And the minimum on the monthly chart, 23.44, is necessary to maintain near-term momentum into the end of the year. Okay? Same thing as the 1864 number for gold. Bitcoin. I put up the quarterly chart on a logarithmic scale to remind you that Bitcoin is in one of the most powerful consolidation patterns I've ever seen. This is unbelievable. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 quarters consolidating effectively between 14,000 on the high end and about 4,000 on the low end. Now that sounds unbelievably volatile. And yeah, in percentage terms it is. But not when you look at how far Bitcoin has come in a short period of time and you think about it in the relative time frame. A breakout above 14,000 on a quarterly closing basis for Bitcoin puts the market primed to make a move to $100,000, if not $200,000 a coin. And I'm not kidding. I'm saying that with a straight face because that's what the chart says. The longer this consolidation goes on, the more likely we'll see those kinds of numbers, and we'll see them within 2 or 3 quarters. And we'll see them just like we saw a 2 order of magnitude move, 2.5 order magnitude move in Bitcoin over the course of 2015 to 2017. When this breaks out, we're going to see that kind of move happen again. And from 14,000, that takes you to around $250,000. Just the way it is. Maybe 300 grand. And in a monetary crisis cycle, why would you think otherwise? So the close here for today is to stave off any kind of, again, just like gold, any kind of near-term weakness signal. 10,720 is the important date, the important number for today. And what a shock. Bitcoin is all over the place, desperately trying to push that number down, below 720 today. They're absolutely gunning for it. Trading between 10.8 and 10.7 for 24 hours now on high volume. Again, all of these closing prices are being manipulated by market makers in order to stave off the worst kinds of signals for the global monetary system. And you see it in gold, you see it in silver, you see it in Bitcoin, we're seeing it in the dollar, and we're about to see it in the euro when I get to that. But we're going to talk about oil first because I forgot the order of my slides. So oil. This is pretty straightforward. I don't think I really need to say anything. If you can't read this chart and see how bad this last this monthly close is for oil, then I haven't taught you anything. That is, we had a complete breakdown in oil and then a 1-bar reversal, which pushed the price up, and a 4-month uptrend that leveled off at $45, and then a 1-bar reversal. Oil's going to close today around $41.50 a barrel, which is well below this low. That low's into like the 43s. Oil would have to literally rally 6% in the next 5 hours. Not going to happen. And that's that, because certainly the U.S. GDP number didn't come in as a blowout at year over year at minus 27%, or as opposed to minus 31%. It wasn't a blowout number. It was better than expected, but only by a couple of tenths of a percentage point. So, it's not a V-shaped recovery yet, guys. Therefore, oil is more likely going to go back to 35, if not $30 a barrel, before it ever goes back to 50. And given how belligerent we are with Russia right now, I think that is more likely than anything. Now, natural gas prices are going ballistic. Natural gas, I think, is back over 280 an MCF. Or at least it was at that level a couple of days ago. I will be honest, I have not looked at natty gas prices in a couple of days. Salt that last comment to take. Or at least fact check me on it. All right, so pulling out from the monthly chart to the quarterly chart on oil, you can see that there's no hope for a price recovery. This is a downtrend. The oligarchy is against oil. The whole purpose of this is to destroy the oil-based economy and bring in renewables in the Green New Deal. They want to destroy the oil economy. So they're trying to destroy the price of oil, and they're trying to do so and make oil uninvestable at this moment in time. And you do that by chasing the price down below extraction cost and then collapsing the demand for oil while you also collapse the supply. Why oil is not going higher anytime soon. Okay. It's going to make it difficult for some of our oil-based positions. I'm not going to lie to you. Stocks like Royal Dutch Shell are going to be in trouble over the course of the next couple of years. But that being said, especially as the dollar rises here, because the dollar's firming. Because the dollar's going to close on a monthly reversal signal. But I don't think we're going to $12 a barrel. So I think this bottom is good. The big question is where oil corrects to. And looking at the monthly chart, I don't think it's going to be much worse than about $35 25, maybe 30, and then we may get another move, and then we'll be looking at, you know, this trend line back into the 50s or something along those lines, and then you'll figure it out from there. Okay. The euro. Let's talk about the euro real quick. So the big story for the euro today is $1.17, specifically $1.1696. And what a shock, as we come into the European close, they are desperately trying to move the euro above that number because they do not want. I talked about this in Sunday's market report. For those of you who haven't watched it yet, go back and look at that chart. You can also go look at my blog post from Friday because I lay it out there as well, which is that if the euro closes below 116.96, it throws one of the most bearish bars I've ever seen in markets. So no shock they're going to be desperate to try and stop that from occurring on this quarterly close. So even if they can just push it back up and prop it up like, oh, okay, let's get it to $1.17 it'll look good. Okay, yeah, and then we can let it collapse tomorrow. It just makes it a setup for a 2-bar reversal on the quarterly chart as opposed to a 1-bar reversal. It staves off the euro's destruction for another 6 to 8 weeks. That's all it does. Because the long-term downtrend here is that the euro is pretty much almost done. And something else to consider here. Again, I tell you that I don't like drawing lines on charts and looking at, you know, macro formations or anything, but I'm going to tell you 2 things. One, this pattern of lows here is very disquieting if you're thinking that there's a floor being built in the euro. You've got a down, you got a low, a lower low, and then a higher low. Okay, we got a violation in 2016 of this 2014 low. We haven't gotten that. We didn't get that this year, which is in the euro's favor. But if this is supposed to be a flat bottom triangle, right? Continuation pattern of this downtrend, then this low should bother you if you're a euro bull, because you can't draw a good bottom here. This should have never been violated. This low should have never been violated. We should have been trading on that low. Now, we never closed below that low, but we did close below all of these closes in here. And so these 2 lows in here are bad. It means that there's very much structural weakness within the euro in the long-term chart versus the dollar. And the next time it fails, even though there's a nice, you know, solid 1-bar reversal here off of this downtrend, but it runs right into this long-term resistance line and should start going lower from here, especially if they're going to move to perpetual bonds on January 1st, 2021, as Armstrong is signaling behind the scenes. The euro's got to get crushed, and it will get crushed to parity pretty quickly. And this threat of a no-deal Brexit, and the dollar rising, and Trump winning the election, which looks likely at this point. So, okay. And now let's look at the Dow Jones and look at the DAX, and then I'll let you go. I'm a little short today, but I think 29 to 30 minutes is still good enough. The last thing to talk about is that we had, there's continued, if you look at the Dow, you've got a massive uptrend, a 1-bar reversal that's not reversed, but it still grinds higher. And then it collapses even worse, and we get this kind of bullhorn pattern, right? Higher highs, lower lows, never a good sign. Then we get this massive bounce off the bottom and a massive rally, and a massive, 10,000, 12,000, 11,000 point rally in the Dow, but it's just a reaction high against this high. We get no indication of real, you know, any new indication that we're going to be moving higher here. Now, this is the second highest quarterly close in the Dow of all time, because we are going to close here, closing above all these highs in here, and that's mostly today's action. There's a 350 point swing. I did update this chart for this morning as I went to press. So there was a big 350 point rally in the Dow as of 10:30 this morning. Now, if that holds through the close, this is a better bar than we were expecting, because here's the quarterly statistics. You've got nearly 10 to 1 pot odds that we're going higher versus going lower, meaning the market is already setting up for a dollar upwave and a Trump win in November. Okay? And a euro collapse. European banking stocks, I'm multiple freaking articles about how bad the conditions are in European banks. You've got Lagarde over the ECB is having defections left and right over her policy. So we'll see. And then the Germans are going to finally come in and try and push some kind of Brexit deal over the line that isn't, terrible for them. And Macron is going to probably stab Merkel in the back, and that's also going to do untold amounts of damage. So the strong close here in the Dow, while it's not a new high, and it should be most likely a reaction high, and there's probably going to be another, washout before we go higher. But this is going to be very hard to chart because of this overall pattern. But just my spidey sense coming into the close here, the Dow is in better shape than it should be. And that means that we're on the cusp of the next dollar wave up. All right. And then we look at the DAX. Now, here's the big thing to take away from the DAX. It should be obvious. Well, let's look at these highs in here. We only once ever closed on a quarterly basis above any of these highs, right? This is the highest quarterly close of all time. And since then, the DAX hasn't come close. And it's violated that high close three successive quarters and can't close above it. This is where you need to watch very carefully on the DAX. We had a small rally this morning to come into the close, nothing like we saw on the Dow. It's like maybe 30 or 40 points. Suppose literally a 1% move. We got like a 0.1% move on the DAX because the German economy is in serious trouble. This violation, we get the same kind of pattern in the Dow. A collapse into the end of 2018, a 2-bar reversal to start 2019, an uptrend, a collapse into the Corona apocalypse. We get a new high, which nobody can't close above, and then we trace an inside bar above this high, but can't even close above this high. Can't close above this close or even this high. Yeah, no, this is going to collapse. The DAX is setting up for a collapse in the 20s. The market is not interested in taking German stock market above 13,000. It's just not. And if it's not interested in taking the German stock market above 13,000, where's that money going to go? I think that's the most salient question of all. So I'm going to cue the music because it's that time. And we'll talk again next week, Sunday even. You guys take care. You be well. Keep your stick on the ice.